Hello dear traders, welcome to another live webinar. My name is Angelo, as you can see here on the screen. I'm your presenter, your host, friend, mentor, teacher, all of the above and more, much more I hope. Guys, welcome once again. As I said, the webinar today is planned like always. We have good news regarding webinars as well for future webinars. As of September and onward, we are going to be having our webinars on Thursdays. So note it down. This time, every Thursday, we're going to have a webinar coming your way. Every second Thursday will be the English one, and then we have Hindi ones between them as well. So it'll be an English one, a Hindi one, an English one, and then a Hindi one. If you speak other languages, if you speak Indonesian, we're going to have Indonesian webinars on Tuesdays, also Thai webinars on Tuesdays. So if you're not subscribed already to our channel, please click the subscribe button, notification bell on as well. If I say anything or you find something useful from this video as well, please do like the video as well. Let's just put that up on the screen as well so you can see what I'm talking. Like, subscribe if you enjoy these videos, and ring the notification bell so you're notified when the next webinars will be coming, because we are going to be having loads and loads of them. Many of which, like today's, are going to be having giveaways. We are going to be giving away some really nice gifts for our traders. Only thing you need to have is an account to be able to utilize these gifts I'm going to be giving out. So if you're new to our platform, if you never traded on IQ option before and you want to make an account, there is a description. In the description of the video, you'll find a link. You can make an account there, start your trading on the demo. Everyone gets a free demo account with $10,000 on it, which is replenishable. Once you get to the skill level up and you're ready to start trading on the real account, you just need to invest a bit of money in your account and start trading. But it's absolutely free and very, very easy to do. So go ahead and make an account and hopefully win a prize later on as I explain more. Looking at the chat very briefly, I see loads of comments coming in. I'm hoping that we have a nice big audience that is watching this. This is YouTube, so you can re-watch this video many times if there's something I said and you didn't fully understand. Of course, I'm going to have a quick Q&A at the end as well for the live audience. And then if there's anything that you need to re-watch or re-understand, you can watch this video 10 times, 20 times until you do fully comprehend the importance of it. I think that covers more or less what I want to say now, and let's just jump straight in with the presentation and get things started. I am seeing lots of chats coming in here. I see the last one here from Technology Earnings writing that I am from Pakistan. Welcome to you, sir. I saw from before Morocco, Trading Market wrote there from Morocco. I saw Sri Lanka, a trader from Sri Lanka wrote us something on the chat there. UAE, welcome traders from the UAE, where I think it's a little bit hot for you guys, so don't go standing in the sun for too long. Don't think anyone smart does that nowadays. Okay, jumping straight into the presentation, and today's subject is a very important one for the current times, but also for any time when the markets are unstable, anything threatening the markets. The current situation, what's going on in Russia and Ukraine. I hope Alexander is here watching. He doesn't miss a webinar, and Alexander is from Ukraine, so I hope you're doing well over there. If you are watching, Alexander, just do your usual, write me there that you were watching from Ukraine, and our thoughts are with you on all your compatriots that are suffering at this time. But back to the point here. During this crisis that's going on with Ukraine and Russia, we have seen oil prices take off to crazy prices. There we go. There's Alexander. Nice to see you, buddy. So yeah, prices of oil have went through the roof. Safe haven assets, gold, silver, commodities, they went very, very high in the beginning of the conflict between Russia and Ukraine. This is something pretty standard. Whenever the markets do go through a rough patch, economic crises, pandemics, markets tend to go in a weird way. And big investors, big people with big monies, they want to make sure that they don't go to bed one night with $1 billion in their account and wake up the next day with $1 million in their account. That's a lot of money to lose overnight. So they spread their investments in very smart ways. They put some money on some assets, other money on diversifying, cross trading, and this way they don't lose money, they actually make more money. It's a bit complicated, but we are going to be taking a look at that today in today's presentation. So bear with me, and do send questions if you do have any questions. First slide is not related, as you can see here. first slide is about the giveaway. 15 winners again are going to be receiving a gift from us. The important thing to note that you will have to leave a comment in the comment section below when the video ends the live stream and it goes to a normal video online. You just need to leave a comment underneath. We'll give you more information of what exactly you need to answer. There will be a auto picker, is which software you use to choose a winner. That will happen today. In the next couple of hours after the webinar ends, there will be the raffle where we choose the winners. The winners will be notified, and within 1 week, you have to claim your prize within 1 week to be receiving the prize. All right, I'm seeing lots of questions here. My moderators are watching as well, so hopefully I'll be seeing the moderators responding to any questions that they can answer straight away. And keep your questions for me towards the end, because I will have a nice little window where I can answer some questions as well. Right, carrying on. Question for everyone here, and open question basically: what are safe haven assets? Good question. What are safe havens? A type of investment that is expected to retain or increase its value during times of market turbulence or instability, as I explained before. They can help diversify the investor's portfolio during periods of market uncertainty. So again, when things are unstable, when words like recession are being thrown around, when pandemics are being thrown around, where big wars between two big powerful countries are being talked about. China and America are not on the best stance right now. So there's always fears and worries out there regarding the markets. I saw here Avish wrote commodities. Very good answer. Commodities is a very important part of safe havens. Not the only ones though, there are others. So we're going to be taking a good look at that. So this is useful information not only for today's trading, but for future trading. If you do see perhaps next year, because there is lots of talk right now about the US dollar becoming very, very strong, and maybe too strong for their own wanting. So if there is to be a recession in America and the US dollar loses significant value very, very fast, that could have a big impact on many commodities, stocks, mainly stocks, American stocks like the big S&P ones. They could be hit very, very hard, positively or negatively. We don't know. So the best thing is, as you will see, to diversify. We're going to go on and explain that a bit further, but let's just take it step by step. Some investors look to buy safe haven assets that are uncorrelated or negatively correlated. Correlation, we're going to explain it a bit further down. If you're not aware of this, you'll definitely be aware of it and understand it by the end of this webinar. Precious metals, currencies, and stocks from particular sectors have been identified as safe haven in the past. We're going to take a look at many of these right now to understand. Please explain withdrawal process. Ryan, best thing with this one, chat with the support. You have support 24 hours, or they're always available on the chat. If there's any particulars, many times if you're having delays with withdrawals or anything, they could be related to your verification of your account or just the banking transitions that have to happen. So it depends on how you deposited, how you're withdrawing. So best speak with the support to get direct answers to your case here. If it's just a simple thing of needing to verify your account, or you haven't verified your ID, then just take it up with the support and they'll explain everything that is needed. If you are a VIP, your account manager can definitely help with that as well. And my moderators here I see are writing as well, so hopefully they can give you some assistance as well. Moving along. First one we're looking at, the trader who wrote here about gold or commodities. It is a commodity, gold, a very, very valuable commodity. Everyone likes gold. We're going to have a webinar coming up in the very near future about gold to give a lot more explanation about gold and why it's such a coveted commodity for the people in general. So historically, aggressive economic expansion leads to high inflation. As a result, currencies can lose value. When inflation goes up, currencies, normally banks restrict the currency. They have their quantitative easing to restrain the currency a bit. Lower interest rates, they can bring the currency value down, and people with investment plans, they will see this as an opportunity to put their money onto something like gold, which is a lot more stable, and it is correlated in the opposite direction. So the currency, for example, let's say the dollar is losing value, gold will be gaining value there. So under normal circumstances, not always, but that's the idea behind this. Then this can lead to higher demand for gold. And investors may search for alternative methods to preserve their wealth. As mentioned, gold is one of them. And historically, gold has performed well in times of high inflation. High inflation is what is going on right now in America. Banks are trying to slow down the American dollar's rapid expansion and how it's growing so fast. We'll see on the live part. I have some things I want to show you there about the gold and especially about the dollar versus the euro. So we're going to get into that a bit later on. Treasury bonds. This is something that is not much understood by many people. Treasury bond is something that is issued by the central bank in the US. For example, you'll see this US Treasury bond. It's basically a solid plan. They say that if you spend so much money, you give us $10,000, you're going to get one of these treasury bonds, and it's guaranteed you're going to have a fixed return back. Here on this screen, a little picture we have, it's writing 10.18%. So you're guaranteed to get back this amount of money at a certain time. So it's basically strengthening the economy, and it's giving people a viable, say, okay, markets are unstable, I'm not sure what to do with my money, I'll just put my money in the treasury bonds, I trust the US central bank system, so in 5-10 years, I'll get my money back with a 10% interest. If you were to put your money, for example, in Apple, maybe you'll make more money, but maybe you'll lose everything, or not everything, but a massive chunk of it. So this is much, much, much less risky than putting your money in a massively moving stock. Simple explanation. Central banks may rely on lowering interest rates to boost their economy. Lower rates reduce the demand of the currency and utility, ultimately its value, so the value of the currency reduces. By lowering the rate also leads to higher bond price of bills, so you have more bonds available, people will look to buy in those. Treasury bills are fully backed by the government, which increases the trust factor. So if you are into trusting your government, US for example, it is a powerful government, they are the current superpower of the planet, military wise, economically wise, so it is something that you can trust in. So it is a very viable way to secure your money into something which is more or less rock solid. So investors may see the opportunity to invest into the bonds due to the high price and added security they offer. Simple and easy. Treasury bonds on the markets. We have similar things in the ETFs that you can invest into, which work accordingly. So, but this is something that is just explanatory for the masses. If you understand how the system works, you can understand that this is where the big boys put their money, and we're talking big money. If one of these treasury bonds, for example, here is 10,000, you need to have a big wallet, a big pocket to be able to buy a couple of these, or maybe 100 of these, so or more. So it is a good way to secure your funds. If you are a multi-millionaire watching and you see the markets are getting unstable, then consider getting some US treasury bonds or other government treasury bonds from government bonds. Defensive stocks. Let's take a look at this one now. Defensive stocks, they incorporate some stocks that we're looking at are a lot more passive, let's say, not so aggressively expanding. This includes utilities, healthcare, biotechnology, telecommunications, and consumer good companies. People have to eat, people have to drink. If there is a global economic crisis, you still have to eat, you still have to feed your family. So Walmart, for example, will keep on selling food products even if you're tightening your expenses, you're cutting back on expenses, you still have to feed yourself. You will still need internet for everyday life nowadays. It's very hard to live without internet. You guys are all watching this webinar because you have internet. I don't think many people nowadays can imagine a life without internet. So if you're getting internet from your internet provider, that provider is going to keep on getting his money. Defense as well, healthcare. If you are sick, you are going to go to a doctor. You're not going to cut down a tree and make a tea out of that tree to get better. You are going to go to the doctor, so you are going to still be paying your medical cares. That's all into this sector, defensive stock sector. So these ones will not lose as much value as, for example, Apple. If there is to be an economic crisis and you have two things to think about, feed my family or put my money into Apple, you're going to most likely feed your family. So this is the backing behind this idea. Consumers will always need to purchase food, healthcare products, and basic home supplies, hence why they're going to be buying these. Therefore, companies operating in this defensive sector will typically retain their value during times of uncertainty. They might not gain a huge amount of value, but it will be similar to the treasury bonds. They will keep their value. So if you invested your stocks, you took your money out of Tesla and you put it into Walmart, it's got a much better chance of surviving the difficult time than something which is a luxury item like an electric car. Currently, maybe in 20 years, we'll all be driving electric cars, or better, flying cars. Investors may decide to invest some of their funds in chart stocks to balance out, diversify their portfolio. Again, we're going to show a little bit of this on the last couple of slides and on the live account as well. Diversify is a word I'm going to put a lot of emphasis on. It's always a good idea to diversify. Diversify basically means splitting your investments. Don't put all your money in one basket, put your money into different baskets. One egg here, one egg there. So if something is to fail, you'll still have a nice big majority of your money in other baskets that are hopefully succeeding. So you're still making a profit. Maybe not a huge profit like if you get lucky and you hit a bingo like Warren Buffett did with Coca-Cola, but you are basically playing it a lot safer. Safety over caution is what we're basically emphasizing here. Back to the giveaway. Anybody interested in the giveaway, of people watching this live, this is information crucial to you guys now. So what we're giving away is free entrances, 15 winners will all get these 3 things we see here on the page. So free entrance to the monthly tournament, free VIP training session. We have our VIP account managers on standby that will give the lucky winners a free training session on any subject you want. Money management, strategies, indicators, whatever you feel you need help for, you'll have the full attention of a VIP account manager to guide you, help you, and give you a bit of a taste what our VIP traders get. Then exclusive tournament strategy PDF. Our experts have worked on a strategy that works very nicely for tournaments, and this exclusive PDF will be only available for our winners. I don't think even the VIPs have access to this. So it is quite unique that 15 winners will get this PDF. Make sure when you are contacted, if you are a winner and you're contacted by one of our account managers to give you to set up the training session, make sure you ask for the PDF file so you can get that also. More information will come up on a few more slides. So if you are here only for the giveaway, you need to be a bit more patient, and I will give you more information as we come towards the end of the webinar. So stay with us. Okay, exchange trade funds, ETFs, is another thing we're looking at. Again, it's looking at more or less the same things here. Funds that investors are in defense stocks like the utilities, SPRF ETFs. Okay, so funds that are designed to perform in investors' function compared to the performance of major stocks included in the Utility Pro Short QQQ ETF. If you are lost with what I said there, we have it on our platform. When you go to the ETFs and you can click their ETFs, you'll see the S&P 500. The other one you'll see is the short QQQ. Also consider maybe putting something, I wouldn't say the equal amount, but putting some of your funds into this that correlates exactly opposite. So if there is to be a crash and you see the big stocks dropping, this one should basically counter it. So you're basically making money on one, this one will be losing, but it balances itself out. And if you do use the math correctly, you can have a very nice diverse portfolio where if everything is stable, you're making profit. If everything goes haywire and things start losing, you still have this one that is balancing things out. How do you select the winner of the tournaments? Great question, Mr. Brown. Very good one. We don't select the winners of the tournament. The tournament's basically, example, the tournament that we are going to be offering today, the entrance for, is the big tournament for September. So on the 1st of September, the tournament starts. It runs all the way until the end of the month, and everyone starts with the same amount. So on the 1st of September, the tournament starts. Everyone who's participating will start on a special account with $10,000. The goal is very simple. Grow that $10,000 as large as you can at the end of the month. If you have managed to get yourself into one of the top positions on the leaderboard is accessible to everyone. If you are in position number 5 at the end of the tournament, you will receive the gift prize for number 5. It's cash money always. Could be $2,000, $3,000, $4,000. I'm not exactly sure how much, depends on the tournament, but cash money will be credited directly to the account if you end up in the leaderboard. If you don't succeed to make it, it just means you didn't win. You participated, you gained the experience, the knowledge, but you didn't win a prize, and you can always try smaller tournaments or wait for the next month to start and start the new tournament then. All right, back to this. Where am I? 19 minutes. Still good. The latter is designed for offer up to 3 times the performance of the NASDAQ 100 in investors' fashion. So inverse fashion. So this is expedited. It's like 3 times faster than NASDAQ 100. NASDAQ 100 is the 100 top technology companies in the S&P 500. Safe haven currencies now. Now we're going to take a look at some currencies that normally do very well for different reasons. We're going to show the 2 main ones here. The Swiss franc Swiss economy, everyone knows it's a super strong, super stable economy, the Swiss, and it's major backing of the banking sector. That's why many multi-billionaires and millionaires keep their money in Swiss accounts, because it is not only tax-free, but also it is super stable. The Swiss economy always balances things out to make sure that their currency keeps more or less its value. So it is a very reliable, safe haven asset. If there is a crisis going on, you might see other currencies plummeting because people are putting their money into the safe havens. Swiss franc is considered one of those safe havens, so you will actually maybe see the Swiss franc gaining value where all the other currencies are losing value. So give stability to the Swiss government and its financial system. The US is default a safe haven for companies facing a domestic currency uncertainty due to the fact that it's world's reserve currency. When you're buying anything, oil for example, you have to change your euros into dollars to buy oil. So the dollar always gets extra boosts from this. S&P 500 companies as well, if you're looking to buy stocks in Tesla, Apple, the actual ownership of the stock, which is not cheap, you have to convert your dinars or your dollars or your euros or pounds, you have to convert them into dollars to buy the stock. So that supports very heavily the US dollar. So again, if things are unstable, the US dollar normally has the global backing, being that it is the world reserve currency currently. This might change in the future, but in the world we live in today, it is as it is, and the US dollar is the reserve world currency. Now, diversifying. This is the thing I mentioned earlier, the important word here, diversifying. And during times of market turbulence, a good idea is to just take a look at this little graph here. It's not accurate, you don't have to do it in this proportion, but splitting your investments. Don't put all your money, for example, on gold and just leave it all there. You can split things around. Put some money into some specific stocks, put some money into the commodities, gold, oil, put some money into the bonds, and put some money into currencies that are safe haven currencies, just to balance things out. If the markets are unstable, you might see many traders complain that they're losing so much value because the dollar is just dropping like a rock, or the euro is failing. Then you are out of that. You have your money split into different brackets, so you are basically safer, much safer in that time of instability. And once the markets become more stable, you can just do everything, keep your profit, get your profits out, and you see stable markets. You see S&P 500 flying again, so you can go and invest into S&P 500s, but again, keeping it diverse, not putting all of it into the NASDAQ, for example. All right, so in a technique that aims to reduce the risk, allows interest across various fractions investors. It works by splitting the investment amount to different assets classes that behave differently with each other. So your one, for example, might be gaining, the other might be losing a little bit, but on the overall, you might be making a 5% gain instead of a 20% loss. You can be aggressive, but this is not in that direction. This is for safe traders who want to be more cautious and weather out the storm. If there's a storm on the horizon, you don't want to cruise straight into it. You might want to slow down and maybe go around it. This is that option, slowing down and going around the storm, not facing it head on. So experienced traders use this technique to make sure they don't put all their eggs into one basket. Simple as that. That last chapter there is the key thing. Don't put all your eggs in one basket. Some examples we're going to see here. Okay, since 2016, tech companies have been very popular. We've seen massive gains. Apple, Microsoft, Google, Nvidia, Facebook, Tesla. These ones now are established in the top 10 wealthiest companies in the world. It's not a coincidence. All of these ones belong in one sector. It's NASDAQ, it's technology, Tesla, electric cars, Facebook. Everyone knows Facebook. Nvidia, every computer more or less has or an Nvidia or an AMD chip inside. So these companies, Google, everybody is using Google more or less for searching. Microsoft, again, computers, Apple. Most people are using nowadays an Apple product. People who do convert from Android to Apple most times don't go back to Android after. I'm a victim of that as well. So they're just self-explanatory there. By using diversification, a trader could invest into the above stocks, but also add the portfolio some safe haven assets, gold, bonds, defense stocks, to reduce the risk and possibly receive a more stable profit. If you were to be aggressive, you put all your money into the technology sector, you might make a really nice big profit. But if it is to collapse all of a sudden, if there is to be a crisis, you might lose all the money you made in the last 3 years overnight. That will not happen if you diversify. If you put, for example, you have $1,000, you put 500 into the S&P 500, and you put the other 500, split it into other stocks, more defensive ones, more some bonds, some gold, some stocks. This will neutralize things, balance things out a lot more. This can help reduce the investor's amount of risk, and makes the markets more safe for you if they do crash. If they crash, you're not going to hit rock bottom. Very important. Here's a nice example of that. As you can see here, all except the last one, which is Tesla, but it is moving in the same pattern as the other four. They're all dropping together, as you can see, the peak until the bottom, and then they're all moving upwards together. Apple, Microsoft, Google, Nvidia, Facebook, Tesla, these 6 that I mentioned before, they're all moving in exactly the same pattern. They all drop together, they all rise together. So if you were to invest all your money in these 6 stocks here, you would be losing. If you went for a buy, for example, and they're all dropping, you're losing in all those 6 trades. If they start gaining, you're making profits on all 6. But again, it's very, very high risk. The next example here is a lot more safer. You can see the first one is the one I mentioned before, the reversal, the one that is correlated very negatively to the S&P 500. So in this idea here, you see that the 2 that are the safe havens, USD is gaining value against the Japanese yen because the USD is the safe haven and was doing really well. The SQQ is gaining as well. Then we see the 3 stocks, Apple, Tesla, the 2 big boys from the S&P 500. These ones are dropping. This might be the primary part of the trader's investment. He might be thinking, I'm going to put my money into Tesla. I'm going to put my money into Apple. If you put them only in those 2, you'd be losing here. But by splitting it into 6 categories instead of just 2, you are losing on those 2. You're maybe losing on Verizon as well, because Verizon is telecommunications. So they temporarily are losing, not as a massive drop as we saw the other 2. But then the other positive ones are balancing things out. And then you have, of course, gold, which is basically going sideways here. So that one's a neutral one. You're not winning or losing. So although on the overall here you have 2 winning trades, you have 3 losing investments, and you have 1 stable one, this is a much, much safer way to go rather than the one before. So this will guide you through an unstable market a lot safer, a lot easier. Okay, now it's time for the live to show you guys what I have pre-prepared. So let me start first with the ones here. So S&P 500 and the Ultra Pro Short. You can see with the naked eye that these 2 correlate very differently. As you can see here, S&P 500 is gaining. This one is losing. It's dropping all the way down to there. Then when this one drops, right? This one was dropping before and that one was raising. This one is gaining. Dropping again. Then it's going sideways. This one, it went up. Up to there. When the other one was dropping, went down, climbed again. So they have a very different trajectory. If you see the end part here, just go to the end, which is a lot more clearer. And I think everything is very understandable here. They are totally in the opposite direction. We see the strong gain here. We see a strong drop here. Here there's a rise. Here there's a drop. So these 2 balance each other out. So if you are looking at the S&P 500, the big stock companies, the big tech companies out there, you might think these guys are doing really well. They're going upwards now. You could split your investment, put 60% into that direction and 40% into the Ultra Pro just to balance things out. You will make an overall profit, a smaller profit, but if there is to be a crash or reverse and the S&P 500 all of a sudden starts dropping value, the Ultra Pro will be recovering the majority of that for you. So you're not going to wake up the next day and see that all your S&P 500 investment is just blown or you're in a massive loss. There will be a loss on the one side, there will be a gain on the other, so they balance themselves out. And if there is no crash, you're still making a nice, stable profit. That's the idea behind this, being cautious. Now, this is something I want you guys to notice. Lots of people are looking at the euro and thinking, oh my God, euro's having an absolute stinker over 2022. And if you're looking at the Euro USD, you will see exactly that. Look at this, where it started end of, what is this, the middle of last year was the peak, more or less. Peak was all the way up here at 123. This is in 2020 during the middle of the pandemic. Then after that, when the pandemic was more or less getting under control, we see the euro dropping all the way now to the point where it's almost in unseen territory. We've never really seen the euro being undervalued, less valuable than the USD. The exchange rate now is 0.99, so you actually get less euros for a dollar than at any time before. And you might think, oh my God, what's going on with the euro? Well, it's not really the euro, it's the dollar. The dollar is gaining momentum and strength, which is unseen. If you look at any other currency pair you were involved in the USD is basically off the charts. And we can see this from the next one here. So if I'm going to open here the euro with the GBP, and we're looking all the way back to pre-pandemic times, I can easily just draw a line here and show you that this price where we're seeing right now, the euro exchanging with the GBP, it is very stable, right? It is a price that we have seen it drop to before. It's met this in 2019, pandemic time, close to it here. It reached it in the beginning of this year when the crisis with Ukraine and Russia was more or less kicking off. And it is still on the lower part of that. Here's the low. And the more or less average height, let's say, would be here. Around the 92 would be the height. And that is when the GBP was more or less facing some difficulties of their own with the Brexit. So it is in a decent range. Where it is right now, yes, it does look like a big drop when I draw that line. But when you look at the center point, more or less, I would say this here is the average price where we see the euro and the GBP. It's not that far away from it. 3 cents is not that far. But when you cross that with above and you see this massive drop here, you think that the euro is crashing, where it's not. As I mentioned, it's the dollar gaining a lot of value here. So this is something that you can understand and maybe be a bit concerned about. This level of growth by the USD, it's very extreme. The US government is trying to slow things down with interest rates and increasing the rates to slow down the growth, make people save more than spend more. Inflation is going to go through the roof if it continues this way. And that's what's getting many people a bit rattled and a bit worried about possibly using the word that Joe Biden does not want people to say, the crash word, the recession word. They don't like that word in the US government right now because it is a very scary word. If there is to be a recession, we could see all the work that the US are doing since the end, more or less, of the whole lockdowns and the craziness of the pandemic. That might be coming to a very abrupt end and back to the dark days, if you like. The other thing I want to show, as we are coming to 32 minutes, looking very good here, is gold and oil. Okay, now, many of us know that we are going through a rough year this year with oil prices being very, very high. People in Europe, Central Europe, are really feeling it as winter approaches. I am concerned for my relatives in Holland with regards to this. The whole crisis now with Ukraine and Russia is not ending, which is very tragic and it's sad. But at the same time, Europeans should be much worried about that as well, because everyone in Europe knows where the oil comes from, where the gas, where the heating comes from, and it is from the north line of Russian gas. So if they are going to go ahead with not buying Russian oil, there has to be a compromise for the Europeans, maybe very expensive oil bills, gas bills, heating bills, and parts of Europe do get very, very cold that winter, and without that cheap gas or cheaper gas, people might suffer. If I have to spend double the amount of money to heat my house, then I have to make cutbacks on other sectors. So oil prices did reach an all-time high here at 126, which was absolutely ridiculous prices for oil. It has gone down. It reached a low recently a few days ago of $84 per barrel, which is good. But then if you look not that far back in history, in the middle of the pandemic, the barrel was worth $7 at one point. Where is the $7? Where is the $94? So this explains why, if you are watching this from anywhere where you've seen a big increase in the value, in the price of oil, I'm sure if there's anyone from Indonesia watching, you guys don't really care because gas prices are cheap for you guys. But any country that is not producing their own oil and gas, we can see the big difference. It used to cost me $60 to fill my truck with gas. Now it costs me $120, or more than double is what I noticed. So I'm a lot more cautious where I'm going with my car. hopefully we'll see prices drop, but currently this is a very small drop. And if I'm going to take, for example, Fibonacci line, something that we have done a webinar before in the past, and see from where this big gain starts, I would say looking from the beginning down here to where it is, the retracement we're seeing has not even hit the 38. Normally the 38.2 is a nice retracement level where we can see the market hopefully touching down to here, and then we can hopefully maybe see some lateral movements and maybe drop even further. So this has not even started any level of retrace. There's a lot more drop that can happen. If this is to go to a full retrace all the way back down there, realistically we're going to be seeing some very, very, very interesting movements. And let me just draw this lines in here. So yeah, if we're going to see something happen, it might be something on these levels where it drops. If there is to be some stable markets, 61.8 could be a rebound point. So around $50, $53 would be the price, the neutral price. As we can see here, before any craziness, this is the average price here. In this little window is where we should be seeing the oil more or less sitting. Gold as well. Gold is very similar. These are, reason I'm showing this to you guys is to understand we are in a crazy time. Looking pre-pandemic, 2018 and before, prices were a lot stable, nice stable markets. The time before that we saw a bit of instability and craziness was around 2012, the global economic crisis. We all know how that one went if we are old enough to remember it. So from then, from 2012 up until 2020 more or less, we had a nice peaceful time on the markets, but the last 2-3 years have not been peaceful at all. Pandemic, as soon as we get out of the pandemic, now the Russia-Ukraine situation kicks off. So oil prices, gold prices have been very high. It's no coincidence. 2020 pandemic, look at the gold price. It peaks at 2,071 per ounce. Crazy expensive gold. So if you were looking at this not that long ago, you see the world goes into an economic crisis, people are wearing masks, there's lockdowns, there's people freaking out. Lots of us have felt the pandemic. Maybe many of us who are watching this had caught the COVID virus. Some, luckily for them, have not caught it very hard. Others caught it a lot harder. Some people, unfortunately, have lost relatives and loved ones from this. So the markets responded accordingly. Look at 2019, before the value of gold was sitting nice down at 1,280 more or less. Pandemic starts, we have again, and again, all the way up. Within less than a year, the price has reached an all-time high above $2,000 per ounce. It starts dropping as the pandemic stabilizes, rising and dropping like a normal market would do. Then 2022 begins, 3rd of March. We know more or less by then what was going on with Russia and Ukraine. Gold prices rocket up again. So this is not it's not by accident. People worry, people are nervous. You need to be safe with your money. If you got a lot of money, you're going to put it in something stable. Gold, as the first trader mentioned, is the first thing that comes to most people's minds when they hear safe havens, and that's where they put the money in. As soon as markets become unstable, that's where they throw it in there, onto gold. Once things stabilize a bit, we see this movement. We see it drop. Markets are more stable. People stop being nervous. You can take your money out of gold with a very nice profit you made. If you bought gold here and you sold gold anywhere up this level there, you made a nice profit. When others are losing, you actually gained. So now the markets are more stable. You go put your money back into Tesla, Apple, Amazon, anything that you like from those, and you can enjoy a more normalized market. Once you start sniffing out there might be risk coming, dangers coming, you start diversifying again. The 6 categories we more or less mentioned before. How can I manage the time of trading? 1 minute is a lot. Okay. How can I manage the time of trading? Okay. We have a webinar. The last webinar we did was about money management. So, Mr. Brown, I would advise watch that webinar. As soon as this webinar ends, go back to our videos. If you're subscribed, and you'll see the last video was the money management one. It is a very, very, very good video. If you are not using any money management, definitely watch that video, guys. It's for everyone, not only Mr. Brown here. All right. So that is this for the live part. That's all I wanted to show you guys here regarding this. I think this does explain a lot. How can I turn off the margin engine? Well, that one is pretty easy. Just go to your settings here. If you don't have any positions open on your real account or on your demo account, you come to your settings and trading. And in the settings here, we should have the option of opening and closing and changing our settings to which engine we want. So trade binary options, compare to margin trading. There we go. Just click here and unclick if you want the margin or if you don't want the margin. Simple and easy. Settings, trading, margin. It should be available. If it's not available, the golden words, speak to support. Okay, right. Let's go back to the presentation. The giveaway is coming up very, very, very soon. First, I have a thank you very much slide, writing Q&A, that we are going to be having our Q&A now. So if there are more questions, hopefully relevant to the webinar, which are the best indicators, asks Mr. Good Times. There is not a good answer for that one, Mr. Good Times. Every trader is different. For me, my two favorites are RSI as a leading indicator. I like using Bollinger Bands. I like using many things. I like using naked trading with candlestick patterns. So that is my answer for myself. But maybe Avish here likes using MACD and stochastic as his two favorite. The best answer is what is successful for you. Don't be shy to try new stuff. Give something a good try. If you tested it on your practice account and it doesn't have good results, move to something else. If that works, then that's your answer. That's the best indicator to use. The one that is making you profits is the best one. We have tons of videos already on indicators. We're going to have lots of more indicator webinars coming on as well. We are going to be doing a Bollinger Bands and RSI webinar coming up soon. There should be a poll, if it wasn't already and I didn't notice, asking what you guys want. Please also write us in the comment section later on what times are good for the webinars. What time do you guys want to see this? If there is a better time for you. Hobber is writing from Canada. Wow, it must be like really, really early in the morning in Canada. I'm not sure. I'm not sure about Canada because I know the US have their own rules and laws about trading. I'm not sure about Canada. I think Canada has similarly rules against what is legal and what is not legal in Canada. Support. If you have an account, speak with support or check with your local authorities over there what is legal or not. Avish writes, I'm a beginner. Avish, practice account. If you have an account with us already, use your practice account. We have loads of videos on our channel here already, so subscribe to our channel, click the notification bell, be notified for future webinars that will be helping you, and watch lots of videos. Practice things that you like about this. Money management. If you are a beginner, start with something gentle. Percentage trading, not aggressive hardcore trading. Best time, 4 o'clock p.m. Okay, is that GMT? Is that UTC? Your local time? Let us know, not in this chat, but in the comment section after. That would be very helpful. Let me go back to the full cam so you can see more of my big head and face. Okay, you made a very good success, Manish, on your demo. 1.5 core on demo. That's good. Demo is demo. When you're trading on demo, there's a lot less risk, right? Because if you lose a trade on demo and you lose your balance, you can always replenish it. Where on the real account, you're not having that option available, unfortunately, because it is the real money. You need to be a lot more careful, a lot more precise. If you make a mistake on the real accounts, don't get frustrated. You are going to have losses, unexpected ones, aggressive ones. But you have to normalize your trading. Trade correctly. If you have on your account $500, trade with according amounts. Don't go and put 200, 300 on one trade, because if you lose it, you will be triggered. You will be upset and angry, and you don't want that, do you? And okay, where are the lure of trading unrecognized? Well, Avish, this is different all over the world. Countries have different regulations and rules regarding trading, what you can and cannot do. Some countries are not allowing cryptocurrency, for example. Other countries are very open to cryptocurrency. Some countries don't allow binary trading. Other countries are fully okay with binary trading. So it always depends on which part of the world you're living in and what is allowed and what is not allowed. Always good to check in advance where you're from. So if you are, for example, in the US, US has some very strict rules about what is allowed to trade. Do check with your local authorities what is allowed before you go and invest your money into something that is offering you something which is illegal, because you might get in trouble with the IRS, you might get in trouble with many other sources. Okay, Mia asks, what indicators do I recommend? Mia, if you can write back to me right now in the chat, what is your level of trading? Are you trading for more than 6 months? Do you have experience? Have you used any indicators? What would you say is your experience level? If you haven't used any indicators before and you're new to it, I would say start from the very easy basic ones. Bollinger Band, RSI are the more or less go-to beginner traders indicators, but make sure to use them correctly. Watch videos on YouTube. Be subscribed to our channel so you can watch the one we're going to make in, I believe, October. We're going to have a video on Bollinger Bands and RSI, a very good video that explains how to use both of them together. And we're going to make loads of videos on short videos for specific indicators, exactly how to use the MACD and so on, to how to improve our psychology. Brilliant, Avish. That's a very good question. Every person is different, right? I might be able to control my emotions better up to a certain point. If I lose $100 of my account, I'm still functioning okay without losing control. Maybe another trader loses if he loses $50. $50 is the max he's willing to risk. So it's very important to find your point, your breaking point, and don't go near it. If you can afford to lose $50 in a trading session and still have a healthy account, draw your line there. Don't lose more than 50. If you do well over the next couple of weeks and you grow your account up to 2, 3, 4,000, then you can stretch a little bit your zone and say, okay, now I can afford to lose 100 on my account and I'm still in a good position. So this is something flexible. You have to find your breaking point, and a good advice for everyone is have a plan. If you're going to start trading today and you have 2 hours available to trade, set yourself 2 targets. What is your positive target? If you have 1,000 on your account, set a target. I want to make 100, I want to make $200 profit. 10%, 20%. That's a good level to stop at. If things don't go well, you should have a negative stop point. I'm willing to lose no more than 50. So if I lose 3, 4, 5 trades, I started with 1,000, now I'm down to 950, that's it. End the session, call it a bad day, don't trade again for the rest of the day. Come back tomorrow or the day after when you've got another 2, 3 hours available, no stress, no pressure, and do your trading then. Again, set a new goal, set a new target, aim for the targets. Don't allow yourself to get frustrated and lose more than you have targeted. And another thing, don't trade randomly. Many people, I would say, make a mistake where you might be on a cigarette break if you're working and you think, okay, I got 5 minutes, let's do some trading. You're not going to get anything done in 5 minutes, right? You're not tuned in with the market. You've got no idea what's been going on for the last 1-2 hours. So you jump in, even if you're using an indicator, you might get a false signal. And in a 5 minute, you do one trade, you lose the trade. You had a cigarette break. Instead of relaxing, you go back to work all pissed off. So don't do it. Just don't do it. Wait for your day to finish and have a proper training session once you finish your day. If you don't have time for it, don't trade. There's always going to be a tomorrow. Just don't rush yourself. What is the best time for trading? I see here, according to Indian time. That's a great question. India, you are more or less in the middle of the sessions. Asian session starts early in the morning for you. That's the Australian, New Zealand, and Japan. More or less economies are up and running. Banks are working. People are working. That's a good time for you guys. The European session opens more or less later on in the day for you. And the American session opens late at night for you. So if you're up late at night, then go for your trading late at night. If you like the American market, if you want to trade with the USD, for example, when it's pumping, then aim for those hours. You can just do a simple Google search. Everyone can do this, by the way. Trading session times, market times, and you will see a world map with the time zones of what time the market's open. It will be referred to your basic times, and from that you can understand. If I want high volatility, I want to trade Euro USD, you will find the Goldilocks time when these two markets are overlapping and the volatility will be very high there, and hopefully that's what you're looking for. If you don't like that, if you don't want the high volatility, simply avoid that time. Trade when the market, for example, is closed. European market is closed, American market is open, there's less volatility, less action. That might be better for you. Right, let me go back to presentation because I have one more slide here. Okay, so as we can see here now on the giveaway, here are the following steps that you need to take. To be eligible to win the prize, you have to like this video, give it a thumbs up, you have to subscribe to a channel, click the notification bell if you are going to be subscribing anyway, just to be notified for them, and then leave a comment in the comment section, guys. Not in the chat here where we're chatting together, but in the comment section, leave a comment, hashtag win, leave a space, and then just write a sentence. What is the thing you like most about IQ option? Could be our fast withdrawals, our high profits, me as your presenter, whatever you like about IQ option. Leave that in the comment and that will enter you into the prize. Must put the hashtag win in front. So hashtag win, space, and then what you like about IQ option. That's it. You will be entered into the tournament, into the competition. By the end of the day today, the winners will be notified. 15 people will be notified. 15 people will be eligible to receive a prize. In the next 1 week until the 1st of September, there will be a follow-up for those winners to claim their prize. Very important. And if you do everything correctly, 1st of September, you'll be entered into the big tournament. You'll receive the training session with the VIP account manager, and you'll receive the PDF file for that as well. All right, guys, back to the full cam just to wave goodbye to you. Wish you a lovely day, a very good weekend that you're going to be having up soon. And comments, I'll try maybe if I can to answer some things in the comments as well. We are going to have our next webinar together in the beginning of September, so not that far away. I think it's in around a week and a half. Not next week. No, it is actually next week. Next week Thursday is our next webinar, so dial in for that. We are going to have Thai webinars, Hindi webinars. So if there is any Hindi traders watching this, Thursdays, not the next Thursday, but the one after, will be a Hindi webinar for you guys. So do definitely watch that one if you do understand Hindi. All right, guys, thank you. Good luck with the competition. I hope you guys win. Hashtag win Angelo. Almost, Mr. Trading Market Angelo. But that's close enough. Let me just put that up. There you can. There's my name and my face with Photoshop. Angelo. Don't bother with the surname. Have a lovely day, guys. Have a great trading week, and all the best. Take care. Bye, guys.